Well, after a more than 3-year pause, interest on student loan debt started accruing again at the beginning of the month, and payments on those balances will resume on October 1st. ABC's Tim Pulliam has some tips for the millions of Americans who are affected by this.
Earlier this year, the Supreme Court struck down President Biden's student loan debt cancellation plan. And now, after more than 3 years, Americans with student loans will have to start paying those debts again.
I really don't know quite how I'm going to be able to swing these payments again.
Emily Irwin, Senior Director of Advice at Wells Fargo, recognizes the difficult position borrowers are in.
Understandably, this is something that even though it's been a pause, it felt permanent because it was so long, but it is coming. We really have to be able to set aside any anger or disappointment that changes weren't made with respect to loan forgiveness, because this can affect your financial future.
She says it's time to get organized. Make a detailed list of your loans, including the loan provider, outstanding balance, and interest rate. Distinguish whether it's a private loan or publicly funded through the federal government. For the latter, she recommends setting up automatic payments.
If you do that, you're going to receive a 0.25% off your interest with any federal loan. Many, if not most, private loans also offer you that discount on your interest rate.
Next, Irwin says to re-examine your budget. Look at your income and your expenses and allocate a new bucket to the student loan payments.
If you have a little bit of extra, you might even want to throw a little bit of extra dollars every single month towards that student loan payment that has the highest interest rate.
Tackling loans with the largest interest rates first can mean paying less money in the long run. But at the very least, she says make the minimum payments. And if you're unable to, there are resources available. You can start with studentaid.gov to research repayment programs such as an income-driven plan and look into what types of deferment or forbearance options may be available to you based on a change of circumstances over the last 3 years. Tim Pulliam, ABC News, Los Angeles.
Well, Irwin says the last thing you want to do is miss a payment, which can impact your credit score and affect things like your ability to borrow money for a car or a home.